Hello, today is April 2, 2016. My last call said I was looking for a gap outside of Thursday's range, which we had. I had a reasonably high degree of confidence the gap would be up, and I was looking for a gap and trap. I said if that didn't happen, there should be a big drop. Well, it didn't happen, and there was a big drop with a gap and trap. I know that some analysts like to call this an inversion. I like to call it completely wrong, but that's just a question of semantics. In any case, I have a standard rule that a strong gap in the undesired direction kills the call before the open. I did have a MEJT target of 2065.77, and killed or not, the target did print. There was an old target of 2043.83. The day's low was 2043.98. It's close enough to make this an optional target now, but the same price is also an ultimate target, and ultimate targets ultimately have to print. I don't know why this is moving on me. On Friday, during the day, MEJT gave an ultimate sell signal. The target is 2050.15. It doesn't have to print anytime soon, but usually does. Also gave a buy signal in the afternoon, and that worked. Well, how about Monday? When you start out way down low like this and you rally all day, particularly over a long weekend, that's a positive pattern. And almost always the rally continues on Monday. If there's no continuation Monday, and particularly if we gap down sharply, it's a sign of trouble. From June of 2002 till the end of February of this year, I had 7 ultimate targets which had not printed. Now we get about 150 ultimate price targets a year, so that's around over 2,000 targets and then some, only 7 of which hadn't printed. Since beginning of last month, we've had 4 ultimate targets, including this one, which haven't printed. So based on those statistics, I think ultimately we're going to have a retracement of this rally. The question is it going to start from here or not? Well, this is the daily chart. We got bar 13 of a combo sell signal. These don't always work, and frankly, quite a lot of them haven't worked since the low in 2009, but at least a signal is present. Here's the wave count I've been using. Here's your diamond on stilts. You can see here, if you take your Fibonacci grid, you'll see the prior pattern gives a Fibonacci target at the high. You'll see here the prior pattern gives a Fibonacci target at the low. So I think it's kind of significant that the Fibonacci target was right here on Wednesday. This small violation might not mean much, but it might be an early sign it's going to be a failure of the pattern. But of course, if we reverse immediately Monday, I still would count that as close enough. The wave count I used had this as a big triangle. Normally prices come up and they meet the apex. In this case, this is an overshoot here, but I'm not counting that. In this case, they came up to meet the upper trend line of the triangle at this high. They're now coming up to meet the lower trend line. I would have been happier if we didn't have this rally Friday, because I would like to see it hit the trend line once and then reverse. Just because I like it doesn't mean it's going to happen. There really is not the failure of breadth that I typically see at a market high. And I think there's a risk of failure of the call for a high at this time. If we start dropping early and reverse promptly and quickly, I think everything still is in accordance with the high around this price. But the longer we dilly around here, or particularly if we continue going up, I think it's going to be a failure of a lot of the patterns I pointed out for a high at this price. Long time ago I said this line should be hit at some time. It sure looked out of reach down here. It doesn't look so out of reach, the middle 2100s, if we don't reverse from right here. So I think we're going to either reverse pretty much from this level or continue significantly higher. Not just a small amount. Monday's pattern is going to be, Monday's trade I was going to say, is going to be significant. If we're going to top off in this area, we need to drop promptly and convincingly, ideally by gapping down. If we move up instead, which is how this pattern usually resolves, it could be significantly higher because it would overcome significant resistance. And any gains would have to be held at the close to count. And that is today's call.